Wall Street.
WallStreetBets. What is going on here?
It was the phenomenon that shocked the marketplace.
A new generation of investors are creating chaos on Wall Street.
An online community of retail investors outfoxing the market.
We're really in unprecedented times.
They got memed out of existence,
causing the stock price of ailing companies to skyrocket.
What you're seeing is a cultural movement, not an investing movement.
Moves like this are incredibly rare.
This headline-grabbing story has been told over and over and over again. But until now, nobody has drilled down into the underbelly of WallStreetBets data. Our team at Capital.com has built the most comprehensive picture yet of the relationship between mentions of stocks on the subreddit and their price on the market. But is WallStreetBets a force that will continue to influence financial markets, or a flash in the pan?
This is just the beginning.
WallStreetBets inhabits the meme-driven vortex that is Reddit. It's a channel, or what's known as a subreddit. It currently has 11.3 million subscribers. And in January 2021 alone, it amassed over 2.8 million comments. Although it's been around for almost a decade, it was only in January 2021 that the subreddit really exploded onto the scene.
Most investment groups are looking for fundamentals or long-term plays that they can buy and hold in the market. The whole point of WallStreetBets is not to buy and hold a stock forever.
Michael Haupt is a former moderator on WallStreetBets. A financial advisor by trade, he became one of the subreddit's most prolific meme creators.
You don't see Amazon spike up and down 30% in a day because it's a solid company with decent fundamentals. Whereas BlackBerry or GameStop or AMC stocks, I would say those are the ones we're looking for because those are the ones that give us that that volatility, that volume.
WallStreetBets prides itself on taking on the financial establishment, backing failing stocks that it believes are being unfairly targeted by hedge funds and other big institutions.
On WallStreetBets, quite often, you'll find that some small group in the subreddit or even a large group will get behind a stock. And usually, 9 times out of 10, it'll be a flash in the pan, where it'll rise and fall within a month.
And that's what happened in early 2021. The subreddit's faithful got behind a struggling high street gaming company.
GameStop.
Stock is skyrocketing.
What's known in the markets as a short squeeze was on.
It wasn't as if it all happened in one day, but as it slowly started to accumulate attention, we obviously knew we had something on our hands by the end of January.
GameStop was valued at just $20 a share, but some hedge funds have been shorting the stock at $4, expecting the price to crash even lower.
I don't understand how anyone can be short GameStop at $4. That is really, really risky, really risky.
The posters reckon that, well, if we can start moving this stock higher, it's going to force these institutions who are short to buy back and close out that position. And by buying back, they'd push the stock up. And of course, if the investors have bought in early enough, they'd make money on the way up.
The price of GameStop shares, which had been static for so long, increased tenfold within 7 days.
It was probably the biggest short squeeze in history, if not very close to it.
Then actually, over the next week, the stock was back at $50.
The American cinema chain AMC became the next target. Its stock price had been struggling for years, until WallStreetBets users bought it up in droves, sending its price soaring.
Some in the early days of that stock increase certainly made money. Others who jumped on when the prices were sky high would have lost an awful lot of money. And that is the real risk, but it certainly did take the stock markets by surprise.
But WallStreetBets is far from a two-horse race between GameStop and AMC. Here at Capital.com, we studied data on all NASDAQ, New York Stock Exchange and Amex listed stocks mentioned on the subreddit throughout 2021. That's 4,855 stocks in total. 176 of those have made it into the top 10 most mentioned stocks at least once during the year. So what truly is the relationship between hype and stock price on the now fabled subreddit? Let's start with GameStop, AMC and BlackBerry, the three most mentioned meme stocks on WallStreetBets back in early 2021, when all eyes were on this guy.
We're going to walk down to the Capitol.
But as if from nowhere, GameStop started stealing the headlines.
Look at this. See that spike?
When it comes to investing, timing, like many things in life, is everything.
Set.
And GameStop is the sprinter in this pack.
If your timing isn't spot on, it's going to drastically affect your return.
When we examined the price movement of the stock between the week following the January hype and December 2021, we found that it had increased by almost 300%. But returns for investments made long after the January hype are much lower.
AMC took a different trajectory. It was the long-distance runner of the three.
In contrast to GameStop, the cinema chain stock had a more sustained run. The data show impressive returns for investments made 3 months after the initial January hype on the subreddit.
200-300% returns look incredible, but first of all, there's the benefit of hindsight. There's getting into that stock on that day before the hype, or the day the hype exploded, and then holding it through all of the volatility. If you were a few days late to the GameStop trade, for example, you could have been buying that well above $400.
Ultimately, almost every single one of our picks are losers. And I think GameStop and AMC will eventually prove that.
BlackBerry is the third most mentioned stock on the subreddit.
For the past 5 years, its stock has been on a downward trend, climbing rapidly in early 2021 before falling again. The data showed that investments in the veteran tech stock made 3 months after the January hype would have provided a minuscule gain. Otherwise, investors who had followed WallStreetBets and rallied behind BlackBerry were set for big losses.
Now let's look at the top 5 most mentioned stocks. Palantir and Tesla make this list.
Humanity must become a multi-planetary space-faring civilization. Those seem like exciting goals, don't they?
Since the pandemic, Tesla's stock price has soared. Palantir, which went public in late 2020, has followed a rockier route. If investors had held onto investments in the top 5 stocks for 6 months, they would have made big returns. But it's also worth noting that during that 6-month period, there would have been dips that resulted in short-term losses.
That performance is being flattered by a very strong performance by Tesla and AMC. The other 3 stocks, if you bought them and sat on them for 6 months, you're probably going to be underwater or break even at best.
So what happens if we peel back the curtain of the media hype around January and February of 2021? Looking at all the stocks that made it into the top 10 most mentioned list on WallStreetBets, the returns are much lower, and similar to the S&P 500, an index of the top 500 companies in the US.
It's the old discussion about risk versus reward. These meme stocks have been much higher risk and are higher risk, obviously, than buying something that's a basket of stocks.
In order to get a broader picture of average returns, we analysed every new stock that made it into the top 10 most mentioned list on the subreddit over weekly, monthly and quarterly returns. Following the January hype, returns are mostly negative after 7 days. Monthly returns for newcomers are also poor on average. Those peaks in January and May reflect how a couple of successful stocks offset monthly average returns. Finally, looking at returns on a quarterly basis, the results are mixed. Those who invested after the hype periods on the subreddit in January and May incurred big losses. This is in line with the high risk, high return and get rich quick ethos of WallStreetBets.
The ethos of WallStreetBets has always been right in line with what it took to get rich in our country, which is it takes a risk. A lot of people are going to lose their money. A lot of people are going to lose their shirts, so to speak. But the people that make it big, the people that make it rich, those are the ones that we point to because they provide an example of somebody that escaped and somebody that made it good.
Despite a continued increase in the number of users, WallStreetBets has observed a decline in the number of comments since those heady days in January and February. But that doesn't mean that these users are no longer active.
I think ultimately you could see, a bunch of different groups pop up, each of them promoting their own stocks, each of them belonging to their own segment of the market. And you could see more stocks that maybe are unwilling participants in a pump and dump like GME or AMC or BB or NOK get scooped up by these retail traders who see opportunity where maybe institutional investors don't.
There's a wider trend going on behind the scenes too. The percentage of retail investors as a share of overall US trading volumes has been rising steadily for the past decade, but it's increased dramatically since the start of the pandemic. The global health crisis has accelerated the rise of Generation Investor, a mostly younger but mixed cohort who joined the world of investing in 2020. In the US, one study found that 22% of new retail investors were under 30, compared with just 6% prior to the pandemic.
It's really great to see so many more people talking about investing and talking about really contributing to the stock market and contributing to companies' growth. The problem comes when speculation is swirling around certain meme stocks in particular, and you're going past the kind of fundamentals of that stock and being urged to pile in just to grab on to the coattails of a share which appears to be going sky high.
There's been a crucial factor that has led to the rise of the retail investor: trading apps. During the GameStop short squeeze, downloads of major trading apps increased dramatically.
We talk a lot about equity in the West and like a newfound sense of equity, and we speak about it in many different respects. The democratization of the market isn't just going to be found in how many new people are going to be opening up accounts on Robinhood. It's found in the fact that people now have access to a wealth-generating machine that is the stock market, that is the equities markets.
The prospect of getting rich on meme stocks remains a highly elusive goal for the vast majority of retail investors. Understanding a company's fundamentals and using a reliable trading app can help you to manage the risks involved in trading.
Perhaps the whole meme stock thing has been and gone. That doesn't mean we're not going to see retail private investors having an impact in the future, but it probably won't be short squeezing unloved stocks. It will be something different.
WallStreetBets is not going to be the end-all and be-all of retail trading. So it's sort of all scattered up in the air. It's 52-card pickup, and whoever's able to scoop up and kind of capture that lightning in a bottle again are going to be the ones to win this industry. They're going to be the ones to win the business of the retail trader.
The golden age of the retail investor may be yet to come. The emergence of blockchain-based finance, such as cryptocurrencies, NFTs, and decentralized finance, all largely driven by retail investors, suggests that this new cohort of traders will play a key role in shaping the financial markets of the future.
You can read all of our original analysis and research and data-led journalism on WallStreetBets by clicking on the link in the description below. There's also our explainer video on the inflation hedge battle between Bitcoin and gold that you might find interesting. To watch that, click on the film in the box. And of course, don't forget to subscribe to stay notified of films that we're going to produce on similar topics in the future.